Mayuresh Joshi, the head of equity research at William O'Neill, is with us on the show. Mayuresh, afternoon, and thank you very much for joining in. What have you made of the recent IT numbers that we've had? L&T Technology Services, there was a miss on the top line. The company is holding on to its guidance, full year guidance. You had an LTIMindtree, again, slower than street anticipated in terms of the top line. And now the company is saying that, well, we may not be able to do the double-digit growth that we had earlier aspired for. Numbers are just out from Mastech, Nugent. Some key trends that you've spotted from the IT earnings that we've had this week.
Afternoon, Rima. So two things come out very, very prominently from the IT earnings. One, I think the near-term weakness in terms of discretionary spending stroke client demand, probably the stickiness surrounding that will get played out in the immediate quarters to come. And that has been a very, very obvious trend across IT companies, right from TCS to LTTS to LTIMindtree as well. So I think that is one trend that might be a common thread across IT companies in general. The second element in terms of the discounting factor that has probably happened for the sector as a whole, Rima. I think everyone on the street was pretty much convinced that numbers would be very, very soft, and management commentaries would also indicate that coming few quarters might see disruptions both in terms of order wins and both in terms of pricing as well. So I think both these aspects was something that the street was playing out with. However, I think the commentaries have held out to be pretty solid so far. So I think what transpires in terms of the slowdown that is expected in the US in the third quarter or fourth quarter, which is typically the quarter which decides a lot of orders which flows through Indian IT companies, is going to be extremely critical. At the same time, how Europe shapes up, because Europe still looks very, very sticky as far as macros are concerned. And therefore, that market itself might be an outside risk for the sector as a whole. Having said that, again, I think a lot worse was expected. A lot more has probably been delivered by IT companies in general. And therefore, I think the momentum that we've probably seen in this sector has probably sustained itself. What happens with Infosys tomorrow might also direct to a large extent how the sector probably moves. So anybody holding on to the positions can probably hold on. But fresh positions probably still, in our opinion, need to be taken on full backs.
Okay, got that point. Mayuresh, hi, good afternoon. There's been, I just wanted to get your take on some of the consumer stocks. Today, of course, there's a little bit of selling that's taking place on some of the large cap names. Tomorrow we get numbers from Lever, as Mangalam was just pointing out. How would you look at some of these big FMCG names in the portfolio? Would you be okay adding them at this point in time, or would you look at something else, maybe in the consumer discretionary space? I mean, you have the entire, EMS space, which has been a far better performer compared to staples, at least in the last couple of weeks and months.
Afternoon, Surabhi. Oh, absolutely. I think some names within the EMS space have done phenomenally well. You have a look at what Kaynes Technology has done as an example, Avalon Tech as well. And therefore, the entire addressable market size probably is very huge over the next few quarters. And therefore, I think almost a 3 and 4x kind of a market size gains can be estimated for these companies in general. And they probably delivered in terms of order wins, in terms of execution itself. I think consumer discretionary as a theme comes to our sector rotation very, very clearly. I think this is one theme that can probably still play out from an earnings perspective. When it comes to specific FMCG players, and as Mangalam was mentioning in terms of expectations from a behemoth like HUL, mid-single volume digit growth expected. But for the universe as a whole, input costs are clearly going down. Discretionary demand, specifically from the rural side, is expected to firm up. You'd already seen green shoots a quarter ago. This quarter might be a sustaining quarter because monsoons have resumed. And if monsoons probably remain on track for the remainder of this season, consumer discretionary spending, specifically in rural areas, will make a comeback, which will aid significant amount of volume growth. Urban spending has probably held up, which probably means that the overall volume growth in the second half, with these conditions being met, should be very, very good. Having said that, with input costs coming down, I think clear operating leverage played out. Valuations always been expensive, should be for the players as a whole. So for HUL, I think we'll watch out for numbers, key pivot levels of 2,750. Nestle remains on our focus list. Tata Consumer remains on our focus list. And our take is that if this thesis plays out, the second half will be extremely good for these players.
Mayuresh, let's talk about PNB. What's your view on the stock? I mean, the PSU banking names itself, and PNB, it's up close to around 5% today, moving on high volumes as well. Any view on the stock?
Generally, Nigel, very good afternoon to you. I think the space is doing exceedingly well. We've added a couple of names within this to our model portfolios, Canara Bank and Bank of Baroda, to be very, very specific. Punjab National Bank obviously has its own flavor along with the entire index as a whole. But for the sector as a whole, I think Bank of Baroda probably still remains one of the favorite picks for a few reasons. Even if NIMs compress from 3.3 odd percent, it is going to be still very, very robust. Their SMA2 book is still very, very manageable, less than 1%, expecting very strong credit and deposit growth coming through. And with the kind of PCR and capital adequacy that they've got, I think balance sheet strength should keep on picking up, and it meets most of our parameters on CAN-SLIM. Similarly for Canara Bank, I think the numbers are yet to be declared. But generally, I think if you probably look at the trend, I think the trend should continue in terms of asset quality pressures coming off. You're probably expected to see NIMs being very, very stable on a YOY basis. And therefore, I think the expectations that one has in terms of the valuation matrix as well, valuation is still very, very supportive at this juncture, with the expectations of earnings expansion coming through over the next few quarters, should hold these banks in good stead. So no particular view on PNB, Nigel, but Bank of Baroda and Canara Bank is something that we like.
Mayuresh, so before we thank you, tomorrow is the big event. The demerger finally happens. What value would you ascribe to the demerged RIL and also to Jio Financial?
So to a large part, I think RIL's value will be determined by financials value as well. And anywhere, I think the estimates that all of us have on the street is anywhere between 160 and 200 odd rupees. And to a large extent, also, Surbhi, I think Reliance numbers are due on Friday itself. So a large expectation is also getting built up over the next few quarters that the gas part of Reliance's business expected to hold up very well. GRMs will hold up for RIL, and retail businesses obviously contribute significantly to EBITDA, not that much too bad, but that contribution should continue. So I think the financial services arm anywhere between 160 to 200 odd. And therefore, I think what probably happens with Reliance with the adjustment would get paid out. But numbers over the course of the next 4 quarters, specifically from the gas division, even the O2C business, should hold out very, very well.
Okay, I think we'll leave it there, Mayuresh. Good speaking with you as always. Thanks very much for taking out the time and being here with us today.